you give us a good understanding of the typical investment banking team and how do you interact with different teams and how do you work?
Sure. So, tying in from what we discussed, investment banking typically does, there are three broad verticals within the investment banking division. One is mergers and acquisitions, obviously. Within the M&A umbrella, there are sector focused teams, be it a tech team or an infrastructure team. All of these teams, depending on the client, say if I'm working with a consumer company, then I will probably head to the consumer focused team and ensure that they are the ones engaged on that particular transaction because they have the sector specific knowledge. Similarly, for other sectors, say for example, if I'm working with a bank, then I would try and ensure that the financial institutions team is focusing on that particular transaction. For product teams, the equity and the debt capital markets, these are sector agnostic. So in at any time, if a company wants to issue a debt instrument, they would go to the debt capital markets, but there would be no further bifurcation in terms of sector focus. Similarly, if a company wants to go ahead and do an IPO, they can head over to the equity capital markets team. Obviously, there are a number of other kinds of transaction that equity and debt capital markets team also take up. So this is basically how an investment banking team is laid out. Of course, we interact with a lot of other teams during the course of any particular transaction. There is the risk management team, there is the legal syndicate team, there is the sales and trading team, credit equity research, as we talked about earlier, and the corporate banking team. So all of these teams also have a very critical part to play over the transaction lifecycle. And we have to liaise with all of them in order to ensure that a transaction completes successfully.